Now joined by one of my favorite chief executives, Mark Dytor, chief executive of AECI. We had our fun moment off air where I said boom, close to all things explosives, but good to have you. Nice numbers that you managed to report, but when I first read it, I thought, gosh, thank goodness for land, huh?
Yeah, we are blessed sometimes, and and of course, land has not been strategic for us. And the last 2 years, we have voiced to the market that the large parcels of land we would try and dispose of and get good value. And I'm pleased to say both years now we've been able to get the right value for the land at the right time. So it's helped, especially around the diversification, of course, relative to mining right now.
Yeah.
And we've been able to deliver. Last year we gave a nice special dividend back to the market. And this year we're going to receive another 400 million in the next 6 months. And then we'll be looking what to do with that.
Precisely, but it almost seems like the perfect strategy that you've had in place because you've got some buffers in place to prevent the knock. I want us to expand on the mining landscape. We just had DRD Gold's chief executive in your seat. I understand not too much happening between the two companies, but on the other companies that you interact with, things are clearly not easy.
Yeah, and it's tough. And I think a lot of the companies are quite aggressive in terms of their buying strategy. They've looked at contracts, they've gone out again for retenders. We've come through all that. Some of our biggest customers have retendered our business in the last 6 months. We've taken the strategy to hold on to the volumes as much as possible. And I'm quite happy to report that we've been very successful in that. So we have held on to volumes, and that obviously puts us in a good position for the future, albeit that we have given up margin to do that. So really for us, the next couple of months is to look at our business, try and right size in areas relative to what the customer needs are. And but the commodity cycle has hit us, and we always say we're at the bottom, but last month I said we're at the bottom, and this month it's got even a little bit worse. But we've got to ride the storm. We've been in this industry for over 90 years. We've been through these cycles, but we've got a robust business model, and we'll see this one through as well.
Are there particular measures you have in place to ride out the storm over the next few quarters?
Yes, we do. We've also looking at diversification in terms of our portfolio. We've done a lot in Africa on water. We've also grown our agricultural business. We've just bought a business in Malawi in terms of crop protection additives there. We're looking at other acquisitions in Africa, not in mining, but probably in water and obviously in agricultural chemicals. And then the one of interest is in the food additives. We've just announced another acquisition, a Cape Town-based business, SCP.
Yes.
They're into the ingredients, into the puree, which obviously supplies into appetizer, the breweries in that area. So it's an ingredient, it's part of the customer's process.
Despite the manufacturing environment not looking positive in South Africa, this still made sense.
Yeah, I guess people are still drinking and eating. But I think as the food market is of interest because I think there is emerging a middle market or middle class that's coming through. They want to see more sophistication in foods, and the ingredients plays a very important role. The food additives market is pretty fragmented, so we see opportunity to actually make a couple of acquisitions and offer a total package in terms of product line and services. And then we'll roll that out into Africa as we've got a great footprint in Africa already.
Yeah.
So we'll just roll that strategy behind our existing businesses in Africa.
So the 36% revenue which comes from outside South Africa could go even higher, I take it?
Yes, and I get asked the question quite regularly, and I think where we're going with that is to say probably in the next 2 to 3 years, we would like to see a sort of a 50-50 spread. Yeah.
Mark?
We would be a lot higher at the moment if it wasn't for Indonesia, which has obviously turned a little bit against us. Volumes are quite way down there. So, but we are looking to get more dollar or hard currency exposure as time moves on.
For the investor that's watching, it almost seems as though AECI is changing its image. It's no longer just going to be an explosives company. Bigger exposure, as you mentioned, to markets outside of South Africa. Is this part of the long-term strategy?
It definitely is, and it's a diversified strategy. Unlike other companies that are quite diversified, chemicals is still part of the core, but we're looking at different areas that we believe are growth areas. And that's probably going to eliminate the downturn in one sector that we diversified into other sectors that are more profitable at times in cycles. So for us, it is the strategy. We still believe in the strategy, even though mining is at the moment a big part of that. But we'll see this through, and we'll grow the rest of our business. Still opportunities out there, but tough environment.
So looking for more acquisitions, and we'll keep updated on that.
Absolutely.
Mark, thank you so much for your time today. Interesting always to speak to you. That was Mark Dytor. He's the Chief Executive of Explosives and Chemicals Company, which is changing its portfolio, evidently. Mark Dytor.